It is Good News Friday. And who better to help share with me on the good news, because Tesla actually had an incredibly good week, even if it didn't necessarily show up in the stock price. So Larry, it is Larry Goldberg, always great to have you on, but especially on our regular meeting on Good News Friday. How are you doing?
I'm doing great. And yeah, it's, from a lot of perspectives, good news. Truflation is down again, which is very important. The print on the yeah, it was amazing. I mean, 4.9% growth.
You're talking about the GDP. The
GDP print was amazing. I think it's going to be adjusted downwards, though.
I think, yeah.
But still, I mean, for all the buts and thuses and there, it's interesting. The auction on 10 years didn't go well, but it didn't go as badly as I was worried about. So that was pretty good news. Kind of indicates we may be at a top on interest rates.
You're coming over to my side.
Well, a lot depends on whether how the Reserve Bank is going to resolve their balance sheet. I've been on, I mean, I should get off that, but I did turn up 2 slides today that I think were quite important, and I'd love to show them to you if you let me share my screen.
Absolutely. I think that'd be a grand idea.
Yeah, and really.
But of course, as always, I can't ever get it right, Larry. I don't know why I have such a problem with screen sharing and all that stuff. It is the bane of my existence. But I will figure it out in a minute here. Just have to give me a second. I'm going to so the auction, actually, the headlines that I saw in that suggested that it actually went very well, that they completely sold it out, which is unusual.
Yeah. And it was a fairly large auction. That was the point.
Right.
That it went well in a fairly large auction. So it looks like, the appetite hasn't been sated by any manner of means, and there's continual interest. I didn't see the breakdown. I didn't have time to. It was a very busy day today, but because I had to go to this thing in the morning, but I didn't see the breakdown between foreign and local interest, though.
So Larry, as I mentioned, I don't know what's wrong with me with sharing screens, but now we've got it. So
all right.
Tell me what you found.
I need to own up that, this is really work that I did as a result of some of what Nicholas Colas said in his news brief this morning. And Nick Colas is a co-founder of DataTrek.
Okay.
He's a long time and highly regarded pundit. He's run very large funds before, and he's he's very well known and very well respected. I respect him anyway. But you should be able to see now a very interesting screen. Oh, and I showed you the wrong. Yeah, I showed you the right one.
Okay.
This is actually, this is the graph that Nicholas showed in his newsletter this morning. It shows the interest rate, the 10-year real interest rate, that is to say, interest rate less inflation, at least Federal Reserve's measure of inflation.
Exactly.
And it shows that in 2014 it was down to 0.5 point, up a little bit in 2018 and 19. That was a pause in the share price, in the S&P growth for a while.
Right.
Now it's at this kind of very high level.
Very high level. Yes.
And we all worry, you know, this is really the central thesis. Yeah, there's a lot of concern about it. But I dug a little deeper, actually. And because it's Good News Friday, the good news is this. When we stretch out the graph and go beyond 2008, where he stopped,
I see.
we look back to 1984. Look what happened to interest rates.
Wow. Those are,
And, you know, I looked at this graph and I did a double take. I said, no, there's got to be a mistake here. And then I cast my mind back. And I thought about it a lot. And I don't know if you remember, but 1980, we had this big recession.
Oh, yeah.
It's just right here at the edge of the graph, 1982. And we had this big recession. Interest rates came down. And then, you know, they were held for, they even went all the way back up, even in the midst of, you know, very substantial growth.
right.
It came down to 4%, which is still double where we are today.
Right. Right.
And that was the years, you know, the magic years, and
Yeah.
went on to 1990. And, you know, this was the 1991 recession that sunk George Bush.
Yeah.
But this was, you know, the magical Clinton years where, you know, we had these surpluses on the budget. We had, you know, it was, you know, they were golden years.
Right. Mm-hmm.
And look where the interest rate is, way above our number today. So that number that bothered us so much, the 2% number in this earlier graph that I showed, and that Nick showed, you know, earlier,
Yes. Yes.
which looks like it's going heavenward or into, you know, nosebleed territory. You know, when you look back at the history of it, it's really not that bad.
It's so interesting. I'm so glad you shared that slide, Larry, because it is so much of this whole situation is about historical context.
Yes.
The same thing is true of this is the real interest rate, but it's also true of the 10-year bond. It's
The
also
notional,
true
yep.
of mortgages.
Yep.
And I noted on my program the other day that I was in a meeting the other day that consisted of 11 people, and 2 of them had bought a home over the weekend.
Yeah, that's interesting because I just got from our realtor, not our realtor, a realtor in the area, a postcard with sales in the area. You know, homes in North Carolina are dramatically cheaper than homes in California. So it's not worth telling you the numbers, except to say that the numbers were phenomenally high for our area. And it wasn't as if just a few houses sold. So there is a market, it is continuing, and the numbers are high, notwithstanding the interest rates.
Yes. And
so there is life after 8%.
And it's interesting too, that in 2000, when George Bush came into office, the reason why they started manipulating the mortgage opportunity and letting people have such easy mortgages was because they were hoping to get the home ownership rate up to 65%. Do you happen to know what the home ownership rate is right now?
I think it's above 65%.
It's 66%.
That's right. That's right.
So we actually achieved it in a period when mortgages were strict, and now when mortgages are moving back up high again. So this is, I think if people get the historical context right, bonds at 5%, 10-year bonds at 5%, mortgages at 7%, it is not historically crazy, and it's not necessarily going to stop the market if the rest of the market is in good shape.
Yeah. So Randy, do I pass the Good News Friday test?
Yeah, boy, you passed the test this week, Larry.
I thought after last week, sure, I was going to be canceled.
Well, surprisingly, lots of people watched the show last week, even so. So, Larry, so we've got the interest rate then coming down.
Yeah.
The last couple of days. And then we had the PCE print this morning, which was precisely on what people were expecting.
Yeah.
There was no real surprises in that PCE print at all. We had the GDP print earlier this week that was good. We actually had outstanding earnings reports and calls this week, even though there was
Spotty, not outstanding. There were some really good ones, but some, questionable ones.
Well, but in the Magnificent Seven, they was almost 100% beats, except there was problems in each one, some little thing that people picked on. But after all said and done, even the Amazon one, which was all over the place, Amazon ended up being up today. So I'm confused about what I this morning I ended my show and I said, okay, what's going to happen to the market today? I don't know. And boy, was I right. It was all over the place in that direction. And I would have thought there would have been at least a relief rally, but it looked more like profit taking. What do you think?
I think the market would love to find a direction. I think the market would like to go up. I think I get a sense that there's a lot of skepticism about the macro environment, and for good reason. 4.9 print, you said, is fantastic, but it's also very concerning, because if it's true, one wonders whether the Fed is going to respond negatively. So you get these good news is bad news kind of days. I can't find a clear sense of direction.
So the other day I suggested one possibility. Maybe you'll have a thought on this, because obviously you have a big stake in this. Do you think that there is a pall, kind of a overhang, some very dark low clouds that are not raining yet, there's no storm, but they're just hanging there over the whole Mideast situation, that or that maybe
the Mideast and Ukraine and the two playing to each other,
right?
And I think that we haven't talked about it before, but there's no doubt that influences everybody. At the edge, there's the risk of, at the extreme edge, there's the risk of nuclear confrontation.
Right. And they're even at a slightly less, some kind of a larger regional or multiple regional war that involves boots on the ground. Even if there's no nuclear part of it, it would be horrible. So I guess I think there might be just and so you look at the potential for flight to safety in that situation, and gold is, I think, back over 2,000
no doubt
today. But you think that T-bill, that the 10-year bonds would be a flight to safety as well, and so you would expect that to have maybe come down because it's considered to be, after gold, the safest investment.
Yeah, I speak to colleagues in Israel, and for them, they're focused on business as usual. Some of their kids are, in the armed forces. Some of them have relatives who are, near the front lines, or on the front lines. But for them, it's business as usual. And, the United States is positioning forces into the Middle East. We have soldiers that are under fire right now on the ground in Syria, boots on the ground. And Ukraine, it is a crazy, crazy situation. A lot of my friends are talking about, Ukraine's going to win this war, Ukraine's going to win this war. And then we have David Sachs saying, Russia's won the war. And when you actually, and I posted this, when you actually do the numbers, they are incredible. The Russian losses are just staggering.
Yes.
Staggering. If you told me this was possible, I would never have believed you.
They are going back they're grabbing 1960s era tanks out of storage that weren't even very good in 1960 and bringing them into the war zone.
But nonetheless, they have these massive numbers. They're a country of 160 million.
Right.
And Ukraine today is hardly, it used to be, in the almost 40 million mark. But, they've shrunk quite dramatically. They're down to 25 million. and yet they're holding their own. Yes, they're using Western armaments, but Western armaments are going to run out. And this is the terrible realization that we have disarmed ourselves for conventional war.
Mm-hmm.
I grew up in the Cold War era, as you did, and we had real threats of real,
right,
nuclear war. Do you remember the Cuban Missile Crisis?
I remember hiding under my desk. We were going to hide under our desk in the case of nuclear war. That was really going to help.
And it was real, and it was, it was very. I don't think there's a serious threat of that, except if this whole Middle East and Ukraine thing. Anyway, good news Friday. We haven't had a nuclear war all day.
Yes, right. That's right. Now, Larry, one last thing on the macro. I did a big, long video the other day, which got tremendous views, where I looked at all of the records. I mean, unlike the thing that you just exposed as being untrue, there's so many records in terms of the amount of wealth in the hands of seniors, the amount of home ownership at 66%. The fact that kids don't get married, if they get married at all, the lowest marriage rate ever. If they get married at all, they don't get married till 27 and have kids in their 30s. That's never been true. Just there's record after record after record that are impactful on the macro. Oh, immigration, even though it's illegal, the immigration numbers are off the charts in terms of history. So with all of those wild and crazy things that are going on, it doesn't surprise me, or shouldn't surprise anybody, that the economic theories that we've been depending on are not always necessarily going to continue to give us right answers.
Yeah, throughout my lifetime, the economic theory du jour has been, shown to be wrong because of a factor that we never realized was that important and proved to be, dominant at that time in hindsight.
Yes.
And, you mentioned immigration. It's a very important point. I mean, this country is built of immigrants. I'm an immigrant. I'm sure your forebears are immigrants.
Eventually.
And the reality is that these undocumented immigrants that are coming in by the millions, will ultimately be very productive. Now, there are a lot of bad people amongst them, and that's a terrible thing. And we're not being selective about bringing in the best and the brightest. All of that is true and reprehensible, but these immigrants are going to be very, very productive.
Of course.
In the massive majority, and they're going to add very significantly. And I've talked about how dangerous all this money printing is and what it can do to us and blah blah blah. But if the immigration is large enough, it can actually offset this money printing quite dramatically over the years.
Yes, and then you add the productivity, which is my hobby horse. If you get
if
you get enough productivity, it can start to cut in. It could even cut into the deficit. So, Larry, let's talk about another one of your favorite hobby horses. We had among the good news that took place this week, and it has been talked about to death the last 2 days, so I don't want to spend a lot of time on it, but it is your specialization. We had British Petroleum with $100 million order. Everybody's like, well, it's just $100 billion. That's only 1% of Tesla's. It's still $100 million. It's significant. And it looks like they could be buying more downstream. So I know you have some opinions about this decision.
Well, I posted this long blog, and we did a program on the charging network.
Yes.
The charging network, is a tremendous money earner for Tesla.
Right.
If you watch the services income for Tesla, it's climbing. It's practically doubling in net revenue on a quarterly basis. It's growing at it's a small number in relative to the
Totally.
24 billion a quarter, 12 billion a quarter, 14 billion a quarter of the cars, but of the vehicles, but it's going to be a big number.
Yes.
And that was the thesis. And if you look at Tesla's costs per charge station, how much it costs them to build a post and to install a post, it's literally 50% of the competitors,
or less,
on average.
Or less, yeah, right, yeah.
Yeah, at one point, yeah, it depends on where it is in
Yeah.
the world and so on, and which competitor. But I mean, it is a massive advantage to Tesla, and of course, they're much more intelligent posts.
Right. And as I pointed out in my article or my video yesterday on this, one of the things that happens as a result of this is Tesla will be they'll undoubtedly ramp up more production, which is going to lower their cost even further.
Right.
Just by
so
virtue.
It becomes a flywheel.
Yes.
And this is just the first of many announcements. Firstly, about the charging networks. It started with Hertz buying the cars, and then it morphed to Ford signing up to use the NACS. And now they're selling the posts, they're selling the charge units to a charging network.
We also had Hilton, right? Or
Hilton putting in correct, putting in the charges, which Tesla have been selling those charges to individual units before, to hotels as well. But this is the beginning of this massive move to buy from Tesla its technology.
So Larry, back in the Elon Musk mission, one of the things that I wrote in terms of what I thought were marketing levers, and one of the ones that I stressed the most, and one of the ones I continue to stress and made a big plea about today. So anybody that knows Elon or knows the top brass, would you please tell them, this should be proactive. This shouldn't be, they happen to pick up the phone and call and say, hey, would you sell us some of these units? They should have a fleet division. They should have somebody out there selling the potential OEM parts where they have an advantage. But my sense is that this is a manufacturer or somebody like BP picking up the phone and saying, we just thought we'd call. Are you interested in selling these to us?
I don't think so. I think that in the charge units, there is an active effort to engage. I would be very surprised if there isn't, but I could be wrong.
I would have an active effort on fleets before I'd have an active effort on the charging units. I mean, going out, and how many fleets are there in the world?
Well, we heard
thousands of vehicles.
Yeah, we heard, Randy, we had a Spaces with Alexandra on the European car market. And we spoke to Florian Minderop, the operator of Mr. Green. This is a car leasing company in Europe. They have 5,000 Teslas on lease, and they're going up to 15,000. Amazing operation, amazing guy. And it was clear from what he was saying is that Tesla are moving towards having a fleet sales function, or at least it was his opinion. That Tesla are moving towards that. I think that's going to happen. But beyond selling fleets of Teslas, which is going to be a function of robotaxis, they're going to have to do that for robotaxis. I think they should have an OEM sales operation where they're selling to the OEMs technology.
Yes. Especially the licensing side. I was listening to the Bulls earlier today, and they were talking about selling the skateboard, selling the drivetrain. And I thought, most OEMs that sell to other OEMs, you're talking about 20% margins, 15% margins. It's not a high margin business. I would put way more energy into selling the licenses and the engineering. I think, that's where the real money is.
I think it macht nicht. I think it doesn't matter which way you go. And I think you can do both, depending on the circumstances. I don't think it makes a lot of difference. I think if you want to achieve the mission, you have to help these OEMs solve their problems. Carrier, the Volkswagen software company, is firing a third of their staff, which is a good thing for them, because too many software engineers are much worse than too few software engineers. And if they had 50 engineers, that would already be too much. I don't think Tesla have more than a couple of hundred. It's crazy what they're doing there. I mean, so they fired a third of them. They're having problems, really serious problems. Tesla could help them and should help them.
And would. So, all right, now we're talking about the other legacy automobile companies. I was flabbergasted to see everybody throwing in the towel in a single week. You had Mercedes complaining, you had Ford complaining, you had General Motors taking billions of dollars off of the table in terms of their effort to get into the EV space.
Yep.
So one of the thoughts that came to me this morning, Larry, that I don't think anybody else has suggested, do you think that they never really had their heart in it anyway, and that this is an excuse?
Yeah, I think that, it could be at the C-level they had designs to do this because strategy told them this was the thing to do. But I don't think that ever got to the engineers' head. Certainly at GM, I think the engineers have, they've been silent protesters. They've been silent opponents of this whole thing.
Right.
Now at Ford, it's different. Ford, he separated the company. In theory, he separated the company.
Yeah.
He's still got his heart in it. He's talking a good game. Ford's got serious financial problems, and I think GM will follow. But on the other hand, Stellantis, Citroen have done a really, business-like job in building out really, usable EVs, at least for the French market. In the French market, you see quite a few of them on the road. So, and Stellantis are still making relatively good profits.
Stellantis is a huge sleeper. No, with a name like Stellantis, nobody even knows who they are. I bet you only 1% of the US population has a clue who Stellantis even is.
Yeah.
And maybe not that many, it might be less, but no, they have good profits. They're actually increasing their sales in the face of other people decreasing. They're in lots and lots of markets, and they're not just in deals with other companies to build cars for them. They're really building cars.
And they've got an incredible cash position.
An incredible cash position compared to the other two. So it's kind of, they're kind of a sleeper. I won't be surprised if they turn out to be maybe one of the top 5 at the end of all of this.
When you look at all the automakers, the Western automakers are all under a cloud. Stellantis maybe have less cloud than the others. The ones to look
Western. They're not Western. They don't know what they are. They're headquartered. They're headquartered in one country, and their corporations in another country.
But mainly in the West, mainly Europe and US.
I'll give you that.
but Hyundai Kia,
yes,
are serious about EV business. They're doing it the right way. They're not throwing up their hands. They don't make the kind of statements that you hear from Daimler or Toyota. You talk about
or BMW
automakers. Look at the Japanese. I mean, so all I'm saying is that Tesla could do themselves an enormous favor, and I think you said this, in going to these OEMs and say, we can help. We'll license, if necessary, we'll sell you. They call it the skateboard.
Yeah,
I think the skateboard idea is really, it's kind of a placeholder for what they could provide.
Right.
But I'm not sure they need to provide manufactured goods. I think they need to provide the intellectual, value in terms of the approach, you know, the production system, the designs, and the software.
And essentially, one of the things people forget is that Elon has never stated this. I've stated it for him. Maybe he wouldn't state it if he actually could use his own mouth in this case. But Tesla gives away their patents and says, okay, just use our patents. We don't care, because they know that they're iterating so fast that by the time somebody copies them, they're already 5 years ahead. One of the things that these OEMs would be getting from Tesla would be that Tesla would now be giving them much more and much closer to current engineering rather
Look,
than
you see what's behind me here?
Yeah.
Patents. You know, so I hold a lot of patents by themselves are valueless. It's the implementation of the patents that is so important. And you can give away these patents. Patents are really created to protect the inventor from somebody, you know, bastardizing or, you know, doing damage with that patent, or trying to stop the original inventor from actually manufacturing. That's really the real value of a patent. The patent doesn't really give you the methods and the drawings and the actual means to produce. That's what Tesla has in value. The patents are, you know, just to protect themselves, and, you know, he takes the right attitude to the patents. I've never tried to enforce any of those patents, but they're there to stop people trying to enforce against me my own knowledge, my own, you know, invention.
So Cruise, California said, hey, you're not going to be able to run your operation in California anymore because you lied to us, which was bizarre in itself.
Yeah.
And then they said, okay, we're going to step back and we're going to rethink the whole thing.
When California sent that message, Mary said, whew,
yeah, okay, we're on the same
that's
page.
me out of here.
So you think that this will be the swan song for Cruise?
Yeah, I'm thinking it is.
They're losing billions.
Billions.
And they're in the wrong direction there, and it's years before they'd make money on this. Even if they got it right, it's going to be years before they make money.
That's the puzzle, though. Why is Waymo still going?
Maybe Waymo have as many problems with their vehicles.
I think it's just a question of, you know, sticking it to Elon. I mean, there's no sense in what they're doing. None. They must be losing more money than Cruise. Of course, for them, it's not, you know, it's just a blip on the bottom line. But I mean, for Google, but for the shareholders of Waymo, I mean, this is a terrible situation. Yeah.
I was on a Spaces yesterday where three guys who had FSD were saying that they would be, right now, they would be perfectly happy to take a nap while their car is driving around the city.
Yeah, no, I'm not there. I mean, I have FSD. I drove all the way across the United States and back on FSD, and it made a huge difference to that journey. You know, at 77, you don't just get up and drive a car,
right?
You know, 9,000 miles. You don't, because at 77, you know, the body aches and the mind gets tired and distracted. But man, that FSD is just a miracle cure for old age, really speaking. But I would not go to sleep with it in the city or on the open road.
I think, let me parenthetically say, I think that they were saying basically, if you're only going 35 or 40 miles an hour, how much trouble can you get into? As opposed to the highway where you can get into a lot of trouble quickly.
Look, I'm not going to sit there and argue with the guys. You know, they have, you know, the California roads are far better marked and far better designed.
These are mostly Texas, mostly Austin.
Yeah. I think people Look, they may be right. Who knows? I mean, I drove around Austin with FSD. I didn't find it particularly good. I found California, I mean, LA and San Francisco, all the way to Sacramento, all the way to, you know, Yosemite. It was magnificent.
Yeah, yeah. Interesting. Interesting. Let's see. Let me look at my list, Larry. I'm going to see if I missed anything here. What about you? Am I missing anything that you wanted to talk about on Good News Friday?
If I had something, I've probably forgotten it by now.
Oh, I know. I had another really big one. Okay, the S&P is not doing well at all. And in fact, if you take away the Magnificent 7 or 8, depending on your thinking,
But that's been true for 10 years now.
The NASDAQ isn't doing that well either, if you take away those 7 or 8. The Dow, you know, the Dow stocks that reported last week, like Boeing and such, didn't do nearly as well as the Magnificent 7. Is there any signal in that, other than some of the things we've already talked about in terms of the world is changing, and you know, AI is the future, and these tech companies are obviously mega huge in their fields. Do you think there's a part of a recession is just that it is less than the previous? It doesn't mean it's really awful, kind of like the recession we had last year, so-called. It doesn't mean that people are, you know, losing their businesses and can't pay their mortgage. It can just mean it is less than what it was in the prior period. We just had a 4.9. How do we keep upping that? Do we up that in Christmas time because grandma and grandpa still have plenty of money to spend? How do we up it then in the first quarter?
Firstly, it's not new news. It's been going on for a decade, since 2008. Even before 2008, if I looked at my portfolio, you know, my portfolio typically has got 10 to 15 names in it. It's down to 3 or 4 names now, but 10 to 15 names in it. And if you took those 10 to 15, let's say 15, 12 of them would be in high tech, and 4 of them would be from amongst the Magnificent 7.
Interesting.
So those that were not in high tech, those that were not in the Magnificent 7 and high tech would be, try and think about 1 or 2 that I may have invested in. Wow.
Banks?
You know, I had FedEx for a while.
FedEx, okay.
Yeah, I had FedEx for a while, and some other US corporation that isn't in high tech. Probably none. So this is not new. This is actually reflective of what's happening in the US.
Okay.
And it's why, you know, people in manufacturing and people in distribution and, you know, people in retail are struggling compared to people who are in high tech.
Yeah.
Just reality.
Gotcha. Yeah, I was trying to think.
And manufacturing, we haven't mentioned manufacturing because it's declined so dramatically. But if you take, you know, those, and, you know, in staples, I mean. Yeah,
interesting. Okay, all right. So not necessarily a signal, just a continuation of what we've been seeing already.
And maybe it's getting more so, you know,
maybe just even more so.
As things pull back, it may be getting more so. You know, people are not buying bunches of toilet paper like happened. I mean, all of these staples guys did very well. Right. And, you know, refrigerators and furniture and, you know, all of that did very, very well in the pandemic. And now we're on the rebound from that. So they're doing even worse than they would have done.
Yeah. Okay. So what do you think happens next week, Larry? We've got the Fed coming out on Wednesday. We've got Apple reporting on Thursday. That's pretty much all that happens next week, other than the changeover of the month and eventually the changeover of the time to the standard time. What are we looking at next week? Do Do you think there's still going to be a lot of angst on Monday, Tuesday, and Wednesday waiting for the Fed? Maybe some sideways action
Well, I think
that gets passed?
there's going to be bad news from the war front in the Middle East, in the sense that they're going to talk about Israeli incursion, and there's going to be a lot of backwards and forwards. There's going to be more attacks on Americans. I don't know that the market will really respond very much to that unless there's something serious happens between Iran and the American forces in the Middle East. You know, we've stationed a lot of force there.
Yeah, yeah.
So I think that's the joker in the pack. But for the rest, I think it's going to be more of the same. The Fed's not going to tilt the apple cart at this point. I don't think. I mean,
You think they'll have a
lousy Fed?
You think they'll have a neutral statement then, a more or less neutral statement, which will make us be inclined to think there will not be a raise in December either?
I think they'll hedge on that. I don't think they'll let us derive such a lot of pleasure from what they say. I think that would, in their view, disturb the sort of downward trend. I think they want to keep that pressure on. This is just what I've learned from this Fed. I don't think that's good, but I think that's what they'll do.
All right. Well, Larry, as always, it's great to have you on board. I want to take a quick minute to plug my program for tomorrow morning. The author of Insider Secrets to Buying a Home, my friend and my colleague and even my client, Bill Rayman, will be on tomorrow. He is a brilliant guy and knows a ton about the mortgage business, a ton about how it really works deep down inside. Has degrees from Yale and from NYU, his MBAs from NYU, and certification from Wharton. I mean, this guy is a brilliant guy, and he's gonna give everybody some thoughts about how to buy a house and and the mortgage market right now and where it's going. That I think everybody will be shocked to hear. Now, it's all in the book, but nobody reads anymore, Larry. So they're going to have to come on tomorrow morning to hear what Bill had to say.
Well, I'm going to come and listen too.
Okay, great. All right.
Many of our clients that I served in my company were mortgage companies.
Oh, okay. All right. That'll be interesting then for you. Yeah, he has some very different ways of thinking. I'll throw out a teaser. What the heck? He thinks it doesn't matter when you buy a house or when you sell a house. Doesn't matter. Prices are high, great, buy a house. Prices are low, great, buy a house. Doesn't matter. That's one of the things he thinks. He'll explain why. So, Larry, thanks again for making this a Good News Friday. And I guess you get to keep your job because you've you brought us good news after all.
Yeah, I was getting worried I wouldn't be able to pay the mortgage.
And to all of you out there, it has been great talking to you.